Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 406 on December the 19th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Plug Power Inc., Richtech Robotics Inc., Alcoa Corporation, and Barrick Mining Corporation. And we discuss three new trades on the AdvisorShares Trust Pure U.S. Cannabis ETF, Sable Offshore Corporation, Carnival Cruise Lines, and the United States Natural Gas Fund ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The U.S. markets finished the week with less than a 1% difference in the move from the week prior. The Dow Jones Industrial Average lost 323 points, closing at 48,134 points. The S&P 500 index grew 7 points, ending the week at 6,834 points. And now it's time for the topic of the week. The topic of the week is discipline. Who in here likes the word discipline? It might give you nightmares of getting paddled as a child. Maybe it's having a coach make you run extra laps around the track as punishment. Discipline was always looked at as punishment. However, discipline is a good thing. In fact, it's a great thing. Several people far more accomplished than me have said as much. I would like to share some quotes on discipline. As we approach the end of the year, just know that discipline is one part of the equation that will yield success for you in 2026. Here goes a few quotes. For man to conquer himself is the first and noblest of all victories. That's from Plato. What lies in our power to do lies in our power not to do. That's from Aristotle. Discipline is the bridge between goals and accomplishment. That's from Jim Rohn. Most powerful is he who has himself in his own power. That's from Seneca. He who cannot obey himself will be commanded. This is the nature of living creatures. That's from Friedrich Nietzsche. Mastering others is strength. Mastering yourself is true power. That's from Lao Tzu. Small disciplines repeated with consistency every day lead to great achievements gained slowly over time. That's from John C. Maxwell. A disciplined mind leads to happiness, and an undisciplined mind leads to suffering. That's from Dalai Lama. And here's the final one I'll share with you tonight. We must all suffer one of two things, the pain of discipline or the pain of regret and disappointment. That's from Jim Rohn. Now, self-discipline, as it matters to option trading, can include managing your emotions so that you don't make trades that don't fit your parameters. It might mean doing the math when you just want to make a quick trade and you think that there's quick profit to be made. Sometimes it's having the discipline to walk away if the day is not going your way. Discipline may show up in any number of ways and tasks, but it typically involves taking an action that is not the most pleasurable one at the time. I'm challenging myself to be even more disciplined in 2026. How about you? So that's it for the topic of the week. I know that was a long one, but I hope you guys enjoyed those quotes. They are very powerful to me, and I hope they are powerful to you as well. So let's go ahead and get into the review of last week's trades. We're going to start off with our covered call on Plug Power Inc., symbol P as in Papa, L as in Lima, U as in Uniform, G as in Golf. At the time, the stock was trading for $2.32 per share. I looked at buying that stock and selling the January 2.5 call at 22 cents. That could give us a return of 17.24% in 5 weeks. Well, shares of Plug Power lost 13 cents, ending the week at $2.19 per share. The call option we sold lost 7 cents, leaving us with a net loss of 6 cents if we were to close the trade out immediately. Now, the stock price is still higher than our break-even price, so there's no need to make an adjustment just yet. We also have another 4 weeks before expiration, so time actually can work in our favor on this one. So certainly be ready with a plan for how you'll handle an adjustment if needed. But at this point, I don't see a reason to make an adjustment. Next up, we have our cash secured put on Richtech Robotics Inc., symbol R as in Romeo, R as in Romeo. At the time, the stock was trading for $4.11 per share. I looked at selling the January 4 put at 58 cents, hoping for a return of 14.5% in 5 weeks. Well, shares of Richtech Robotics fell 56 cents, ending at $3.55 per share. The out-of-the-money put that we sold is now in the money. Now, even though we've not passed the break-even point on this trade, our put is in the money, and we need to have a plan for adjusting if the time comes. We are short an in-the-money put. We could be forced to buy stock for $4 per share by getting assigned on the stock. If that happens, we would look to turn the trade into a covered call by either selling an in-the-money or at-the-money call option against the stock. As we work out the math needed to profit on this trade, keep in mind that we will keep the premium we collected when we sold the option initially. That means we would be buying stock for an effective price of $3.42 per share, our break-even price if you remember. Now we could sell the $3 call at 73 cents, which would essentially be like selling stock at $3.73 per share. That would allow us to lock in a profit of 31 cents overall, which would still be a 10% gain on capital. Now, if you don't understand what I just said, just hit rewind and walk through it again. Grab a pen and some paper. That's why I always say it's important to do the math on these option trades. The profit for option trading is often tucked away in the math. Next up, we have our credit spread on Alcoa Corporation, symbol A as in alpha, A as in alpha. At the time, the stock was trading for $46.14 per share. I looked at selling the January 46.45 put spread at 37 cents. That could give us a maximum possible loss of 63 cents per spread. Well, shares of Alcoa grew $5.11, ending the week at $51.25 per share. The out-of-the-money put spread that we sold is even farther out of the money. The stock price is more than $5.50 above the break-even price, so no adjustment is needed on this trade at the moment. It's worked out as planned so far. We still have 4 weeks left, but it's looking great so far, so hope to keep that going. And finally, from last week, we had our debit spread on Barrick Mining Corporation, symbol B as in Bravo. At the time, the stock was trading for $43.09 per share. I looked at buying the January 42.43 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 5 weeks. Well, shares of Barrick Mining grew $1.63, ending the week at $44.72 per share. The in-the-money call spread that we bought is even deeper in the money. The current stock price is more than $2 above our break-even price, so no adjustments are needed on this trade either. This trade is working out as planned, and overall, it was a pretty good week, so hope to keep that going. So that's it for the review of last week's trades. Friday, December 19th was expiration day for all monthly options in December. All new trades on today's show will use the January 16th expiration for monthly options in January. So let's get into the new trades for this upcoming week. We'll start off with the covered call on AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. The stock ended the week at $4.93 per share. I'm looking at buying stock and selling the January 5 call at 56 cents, hoping for a 12.78% return in 4 weeks. Now you enter this trade by buying stock for $4.93 per share and selling the January call at 56 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $4.37 per share. In real terms, the stock purchase will require $493 and you'll collect $56 for selling the option. Next up, we're going to have our cash secured put. I'm looking at Sable Offshore Corporation, symbol S as in Sierra, O as in Oscar, C as in Charlie. The stock ended the week at $7.77 per share. I'm looking at selling the January 7/2 put at $1.30. That could give us a return of 17.33% in 4 weeks. Now you enter this trade by selling the January 7/2 put at $1.30. This trade makes the most money if stock prices finish above $7.50 per share. The break-even price on this trade is $6.20 per share. In real terms, you'll collect $130 for selling the put option, and you'll have $777 locked up just in case you need to purchase the stock. Next up, we have a credit spread on Carnival Cruise Lines, symbol C as in Charlie, C as in Charlie, L as in Lima. The stock ended the week at $31.11 per share. I'm looking at selling the January 31/30 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Now you enter this trade by selling the January 31 put at $1.07 and concurrently buying the January 30 put for 74 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $31 per share. The break-even price on this trade is $30.67 per share. In real terms, you'll receive $33 per spread that you sell and have $67 at risk. And then our final trade on the week is going to be a debit spread on the United States Natural Gas Fund ETF, symbol U as in uniform, N as in November, G as in golf. The stock ended the week at $12.19 per share. I'm looking at buying the January 11/12 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 4 weeks. Now you enter this trade by buying the January 11 call for $1.62 and concurrently selling the January 12 call at 97 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price on this trade is $11.65. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. Hey, I hope everyone who celebrates Christmas has a Merry Christmas. If you've been celebrating Hanukkah, I hope you have a happy Hanukkah. And if you don't celebrate either of those, whatever holiday you celebrate, I hope you have a wonderful one. We will have a show next week, the day after Christmas. I will be recording because that's what I do. In case any of you asked, why would he do that? So we'll be recording next week. It'll be our last show of the year, so I wouldn't miss it for anything. I'm looking forward to recording it. I already have a topic of the week because you guys know I'm an optimist. I look forward to the new year every time that it's this time of the year. I look forward to Christmas, but the new year makes me even more excited sometimes. So I hope you have a wonderful holiday, whatever holiday you celebrate. Have a wonderful weekend. As always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.